Thanks so much, Ramon. And thank you, everyone, for taking the time to join us today for Smart Money Coaching's webinar, Financial First Aid, in partnership with the San Francisco Public Library's Financial Capability Month. Smart Money Coaching is one of the flagship programs of the Office of Financial Empowerment, which is a unit under the umbrella of the Treasurer and Tax Collector. The work of the Office of Financial Empowerment is to convene, innovate, and advocate to strengthen the economic security and mobility of all San Franciscans. My name is Andrea Yee, and I'm the Financial Capability Program Manager for the Office of Financial Empowerment, and I lead the Smart Money Coaching Program. Smart Money Coaching provides free one-on-one financial counseling to anyone who lives, works, or receives services in San Francisco, and that's regardless of immigration status. Smart Money Coaching services are funded by multiple San Francisco city departments and are provided by 3 service providers who have expertise in providing financial capability services to various communities in San Francisco. Balance is one of those service providers, and our 2 Smart Money coaches joining us today are from Balance. But before I introduce our coaches, just a couple of housekeeping items. This will be an interactive presentation, so please feel free to share responses and questions in the chat. You can also submit your questions through the Q&A function, and we'll do our best to answer those questions as they come in. As you may have noticed, the session is being recorded, and all of the recording and slides will be made available to everyone who registered for this event. Without further ado, let me go ahead and introduce you to today's presenters. Chris is a certified financial coach and educator with a background in financial services, accounting, and nonprofit work. He thoroughly enjoys problem solving with clients and celebrating their wins, both big and small. Julia is a University of Cal Berkeley alumni, go Bears, and she resides in the San Francisco Bay Area. Julia is bilingual in English and Mandarin. We're excited to have her share her passion for helping others with their clients through Smart Money Coaching. Chris, Julia, go ahead and take it away.
Andrew Ramon, thank you for the wonderful introduction. And folks, just wanted to thank you and commend you for taking some time out of your day to increase your financial capability, literacy, knowledge. Hopefully you'll find some good takeaways here for you to improve your situation, particularly if you are facing a financial crisis situation. But even if not, hopefully you'll find some good tips in here. And as Andrew also mentioned, you don't need to really stress of taking notes or anything like that if you're not, if you're not able to, as it's going to be recorded, and we'll also be providing the slides that I'll be using today, as well as a handout. A handout, a workbook that accompanies this presentation. So, and I'll be referring to it throughout my discussion today. So just to we'll be wrapping up around 5 p.m. So we'll have a few minutes at the end for Q&A. And, essentially financial first aid, the goal of this workshop is to help folks who may be facing a financial crisis, that leaves you worried or unable about your ability to pay your bills, and hopefully also create a plan for getting back on track. So the topics we will be covering today include constructing a budget and making adjustments to improve your cash flow, prioritizing bills, and communicating with creditors. So here. And so as Andrea introduced myself, I'm Christopher Flores, and she said all that good stuff about me. I really enjoy this work and the impact we make, and learning and growing with clients as they progress through their challenges and go through their goals and life stages. And Julia, would you like to also say a little bit about yourself?
Yeah, hi everybody. I'm Julia. I'm really glad to be here. I'll be monitoring the chat. If you have questions or comments, please drop them below.
Fantastic. Yeah. So again, this is an interactive presentation. So you monitor that chat. We'll be referring to it periodically. We'll be asking Julia what folks are commenting on. And I think Ramon will be also putting the workbook in there at various points in time. And Julia, also, if you could periodically put in the link, the library lead form, if you could put that link in there for folks. Just if you would like to take it a step further and actually meet with one of our Smart Money coaches, you'd be able to do so. But for those folks who have a do-it-yourself mentality, hopefully this material will provide you resources to accomplish your financial goals. All righty. So, the best way to handle financial crisis is to review and adjust your budget, prioritize your financial obligations, and communicate with your creditors. You may not be able to pay all of your bills in full right away, but by taking a proactive approach to your finances, you can minimize the consequences until you get back on your feet. And I just want to emphasize that even if you may have the inklings that you may be having issues, it's very important that you do communicate, especially if you have creditors. It's much better to let them know ahead of time rather than to go several months and not addressing it or not paying that bill. There could be much more harmful consequences if you don't communicate with them early and often. Okay. All right. So if your expenses are exceeding your income, you will not be able to gain control of your financial situation until you're able to make some changes. So the first step there is to record all of your sources of income, including realistic expectations of income that you will be receiving soon. You can use a chart on the workbook, and I will refer to it briefly here on page 2 here. Julia, are you guys able to see the worksheet, the workbook here? You guys see it on the screen?
Yes, we can see.
Perfect. So yeah, this is what did I say there? So recording income. So here on this page, you're able to do that. All right. And then after that, you may want to think about ways maybe you may be able to increase your income. Review these. So there's some suggestions here that you may consider. You could maybe rent out a spare bedroom. Obviously working part-time for those that are able to and have the bandwidth and the energy to do so. Maybe even reduce your tax withholding. So we like to say if you are receiving a refund, it's kind of like issuing a loan to the government at an interest-free rate, right? So if you have your tax withholdings adjusted properly, you could keep that within your own cash flow and probably put it to better use. Okay, and maybe apply for benefits to the Human Service Agency with like CalFresh or what's known as food stamps, CalFresh in California, unemployment insurance for those folks that have lost their employment. And I want to take a pause here, and if folks have other income generating ideas you'd like to share with myself and our participants. Take maybe just a few seconds for that. Julia, please let me know, or just please go ahead and chime in if you do see any ideas there.
We do have a question about how can one lower or minimize the amount of taxes they owe to the IRS?
Okay, so I wouldn't be able to answer that question specifically, being that we are not tax specialists here. Our focus is, with improving credit scores, reducing debt, budgeting, saving. So we definitely certainly refer you to people who do tax preparation or are trained and licensed in that area. So yeah, that's what I would say to that. Julie, do you have any other thoughts for that question?
No, that was exactly what I had in mind too.
Perfect. Okay, so let's move forward here.
There's some ideas on how to raise income, like holding garage sales,
Ooh.
side hustles, or dog walking.
Oh, side hustles. Yeah, so there are whole websites devoted to side hustles, which I often refer folks to. So yeah, gig work, that sort of thing. So yeah, there are multiple ways you can, increase your income potentially. All right. So yeah, so the next step here is to list your assets. And let's refer back to the chart here on the workbook. So here's an asset chart, right? So folks don't often realize like your checking account is itself an asset, right? So that's what it is, along with these other asset classes here. And so the first, list those assets, and liquidating assets is one way to pay for immediate expenses, but be sure to consider the costs before doing so. For instance, withdrawing money from a 401k can result in taxes and penalties up to 45% of the amount withdrawn. And you're also leaving yourself less money for the future. But if this is the only way you may be able to save your home or pay for your medical insurance, may consider it as worthwhile. It is a good idea to consult with a financial professional before taking such measures. And folks, have you ever considered liquidating assets to pay for expenses? Is this something that you have considered before? Julie, just please let me know if there's any responses to that question. And while you're doing that, selling is not necessarily the only way you can use the assets that you do have. Some retirement plans have cash value life insurance policies that let you borrow against their value. You do not have to pay penalties or taxes when you borrow against a retirement plan, as long as you do not default on the loan. If you own a home that has equity in it, you may be able to get money to pay the bills from a home equity line of credit or a cash out refinance. However, keep in mind that if you cannot afford those payments when you do refinance, the consequences, you could potentially lose your home, since that is what is backing those that loan. All right, the next step here is to assess expenses. So on the chart on page 4 here, I think it's page 4 of the handout. Yeah, we have your expenses. So this is, as coaches, this is something we do every day. We review folks' expenses, each line, each category. So it's very important to do this activity. And so you want to basically list what you're currently spending your money on. Because for a lot of folks, increasing your income may not necessarily be practical, but almost everyone can actually reduce your spending in some way. So the key there is to honestly assess what is necessary, what can be reduced, eliminated, postponed, or substituted with something cheaper. Write what you think you can spend in the future in the proposed column of the chart. So you see here, there is your current spending, and then your proposed, your ideal spending. Maybe you want to increase or decrease certain items. All right. And folks, I want to ask y'all if you have any ideas of cutting expenses. Do you have any neat ways to cut your expenses? Let us know, please. Always looking for those innovative ways to cut expenses.
They're shopping around for better insurance rates and canceling subscriptions.
Mm-hmm. Yeah, absolutely. There are even apps that help you do that. And their first suggestion, they're like shopping around. Yes, that does require more effort, but I'm sure that whatever amount of 30 minutes, hour, what have you, that you're doing research and comparing different insurances or even products, you could save yourself a good amount of money, especially for something that's an ongoing kind of expense. Fantastic. Thank you for sharing. Keep the ideas coming in as we move forward. All righty. Now, the next step here is to assess our debt. So, if you are experiencing a bill paying crisis, right, it can be depressing to think about how much money you owe or how many people that you owe. Come across this every day. We're human beings, so we have our emotions and our psychology. It's not just numbers here when we're talking about personal finances. So it is essential that you take an accurate inventory of your debt. Open up all of your bills, and if you need to, call your creditors to verify your current balances. Another step there is you can actually pull your credit reports at no cost. It's free if you pull your credit reports from annualcreditreport.com. Julie, if you could place that in the chat, that would be great. www.annualcreditreport.com. That's where you can pull your reports at no cost for, through each of the 3 credit bureaus, whenever you like, and it does not impact your credit score. So, but yeah, again, the point is you want to check out your current balances and, going back to the workbook, you can list those. Page 5, it says.
Oh, shoot.
Here we go. Page 5. Yeah, so you could list your creditors, name, balance, monthly payments. Alrighty. And here. All right, the next thing is to review our financial position once you have all the information. How do you know if you have made enough changes to stabilize your financial situation? Using the information from the charts, basically subtract your expected expenses and debt payments from your expected income, right? If you have a surplus, that would indicate that you are in good financial shape. If you are in a deficit, which means that your expenses are exceeding your income, it'd be a good idea to take a look over your budget and see if there's anything else you can change.
Chris, just to let you know, we can't currently see your slides. We can only see the handout on top.
Oh, really? Okay. Oh, geez. Let's see. Let's see here. Let me try to fix that. What about now?
We can still only see the handout on top. You might need to minimize that.
Oh, geez. Okay. Handout. What do you mean on top? On top of the screen?
Yeah.
How about now?
Now we can see the slides. Thank you.
Okay. How long has that been going on? It's been a long. Has it been a while or just now?
I think it was for a while,
Oh, shoot.
but it's okay. Go ahead. Just keep going.
Okay. So, well, again, you'll be receiving these slides in a PDF format. So you'll have that. Let me just rewind here for folks if missed any slides. So we talked about assessing debt, assessing the expenses and assets. So, all right, let's get current here. All right, prioritizing expenses. Y'all can see the slide, prioritizing expenses? Yes?
Yes.
Okay, good. All right, so making adjustments to your budget could take time, and you may not have enough money to pay all of your bills immediately. So you may be having to make an unpleasant decision, which bills would go unpaid or not be paid in full. So I'm going to take a pause here to ask you all what you feel are the most important bills to pay. I mean, obviously, right? So rent or your mortgage is obviously top of the list. But what other do you feel is like essential that you absolutely have to pay? Sorry about that. Do this again.
We have some suggestions like food, cell phone, paying for the car, the mortgage, transportation, student loans, health, and other utilities.
And what are the least important? What are your least important bills? Excuse me. So,
Discretionary.
yeah, go ahead.
There's discretionary spending.
Yeah, so it's kind of like a wants versus needs conversation, right? So you could do without that Netflix, or you could do without the trip to the bar, or maybe even that vacation or something like that. Or those can be those are optional. And yeah, so basically, right? Um, the most important bills are the ones that allow you to take care of your essential needs, and for which there are penalties. That's another thing to keep in mind. The penalties for non-payment are the most severe. So that's the distinction with kind of like the wants versus needs. All right. Okay, let's go here. Let me minimize this one. And for any bill that you cannot pay in full or feel you will not able to be paid in the future, you should contact the creditor or service provider immediately. And this is up to their discretion whether or not they'll do something. But you'll be surprised, many creditors are willing to help consumers who are facing a hardship. So, what we advise typically, one step is just to approach them and say, like, ask them if they have any hardship plans or hardship programs. Believe it or not, if you find yourself here, you're not going to be the first or the last to be facing this situation. So they have measures to when folks are unable to pay their minimum payments or their credit card payments that they can implement. So they may make you jump through hoops, to do that sort of thing. But you can ask. It doesn't hurt to ask. And by the way, when you do communicate with creditors or with anybody really, any anything financial related, you always want to probably note who you are talking to, and if they have like an ID number, the date of the conversation, all that stuff, because there can be a lot of red tape involved as well. So you want to just document everything as thoroughly as possible. So what you see here, though, on the slide is some tips to keep in mind, right, when communicating with those creditors. You want to be specific and honest about the reason for your hardship, because the creditors are going to want to know what happened, and have a plan for the future and let them know that you are making changes so that you can resume paying your bills in full. And this is very important. You want to remain calm and polite when you're dealing with a financial crisis. Being upset is very understandable, but yelling at a customer service representative definitely never helps the situation. I've experienced this firsthand. We often make these calls with clients. So, it's want to, just like everybody's a human being. So if you treat people respectfully, it goes a long way. And, when you're discussing things with them, you don't want to make promises that you cannot keep. It may be tempting to jump at any concessions that they're willing to offer you. But remember, you may only get one chance at this help. If you can only pay $10 a month, then you should certainly say so. You should say what you are actually, be very clear what you're able to do. And as I mentioned earlier, keep a record after every phone conversation. Record the time and date that you called, who you spoke with, any actions you would take, and any promises the creditor made. Be persistent. That's another very key part of this. If you're on the phone, the customer service rep says he or she cannot do anything, ask to speak to a supervisor. If that is not effective, send a letter. And on that note, sample hardship letter is contained in the workbook here on right here, page 6. So there you have it. Okay. And all right. What else here? Oh, and I'm curious if any of y'all have contacted your creditors in the past when you were unable to pay your bills, and if you were, would like to share what may have happened in those situations, and also if you have any tips for successful communication. Any feedback there, Julia?
Not seeing anything yet.
Okay, no problem at all. Okay, next thing, we're going to discuss handling different types of bills. Whether you rent or own, making your housing payments should be your first priority. If you do not pay a mortgage, or I'm sorry, if you do not pay your mortgage, your house can be foreclosed on. If you do not pay your rent, you can be evicted. Sometimes people find themselves in a situation where they just cannot keep up with the payments. So if you maybe find yourself in a situation, or folks that are in there, they should contact the lender or landlord immediately. So it goes back to the early and often communication. And if you are worried about the long-term affordability of your mortgage or not particularly attached to your house, selling it may be an option. It may make the most sense. And maybe you might have difficulties attracting a buyer. So if a lender agrees, you may be able to do a deed in lieu of foreclosure where the house is given back to the lender, or a short sale where the house is sold for less than the amount owed on the mortgage. If you do want to stay in the house, refinancing is one way to bring your mortgage current or to get better terms. But it can be difficult to get a new mortgage if you have a low credit score or little equity in the home. In general, the best thing you can do is to contact your lender and make them aware of your situation. They may allow you to send reduced payments for a specified period of time and pay the remainder later, or modify your loan to reduce the payment. If you are a renter, the landlord may be willing to accept a reduced rent for a few months, or allow you to make up missed payments over time. Leaving and renting a cheaper place is another option, obviously. But if you do have a lease, you are responsible for the remaining month's rent. However, the landlord may voluntarily release you from the lease if you explain your hardship. You can also be let off the hook if the landlord finds a suitable replacement tenant. Now, in many states, a car can be repossessed only after only one missed payment. So if you cannot make your payment, it is a very good idea to contact your lender immediately. Lenders are sometimes willing to extend loans to cover missed payments, or maybe even set up a repayment plan. Other possible options include refinancing or selling your car. Some people choose to give the car back to the lender instead of waiting for them to take it, and this is called voluntary repossession. Your lender may be willing to give you a concession or two if you save them the hassle of having to repossess the car themselves. But otherwise, a voluntary repossession is no different from a regular repossession. Delinquent utility payments can cause your service to be suspended or terminated, but some utilities are more important than others. If a service is not needed and cannot be paid, you may just want to cancel it. If a service is needed, call the utility company and ask about payment arrangements. You may not have to pay the full amount owed right away. You can also see if they have any payment assistance programs for people facing economic hardship. And yes, we assist folks finding or identifying those assistance programs. The city of San Francisco does have those, so that is an option. As far as insurance, it is best to work with your current insurer to prevent your policy from getting canceled, because if it is, you may find it difficult to get new coverage or have to pay a larger amount to reinstate your policy. You may be able to lower your car insurance premiums by increasing your deductible If your car is older, you may want to switch to liability-only coverage. It can be tempting to let a life insurance policy lapse, but consider what would happen to your family if you or your spouse died. If you have a cash value policy, you may be able to use some of the cash value to pay your premiums or switch to a term policy, which is usually cheaper, right? So reducing coverage instead of canceling the policy immediately may be another possibility. Discuss with your insurance agent what options may be available for your policy. Some people that have their health insurance paid for by their employers, and some people do not. The premiums for a standard policy can be very, very high, astronomical. If your income is below a certain limit or you are pregnant or disabled, you may be able to get coverage through Medicaid or a state health insurance program. Otherwise, if you cannot afford the premiums for a regular policy, you may want to look into catastrophic medical insurance. Catastrophic medical insurance only covers major medical events like hospital stays, and thus the premiums tend to be more affordable. Now, paying your mortgage or rent is more important than paying your credit card bill, but keep in mind that neglecting unsecured debt, which credit cards are unsecured or revolving debt, especially if it is done for long periods of time, can result in collection and legal actions, as well as damage to your credit report. So fortunately, there are often some flexibility with unsecured debt. Many creditors offer hardship programs, which I spoke to earlier, which are short-term payment arrangements that allow you to make smaller payments. So often creditors will lower the interest rate as well. So that goes back to the communicating with creditors discussion we had earlier. Now, for those with student loans, borrowers experiencing financial difficulties with student loans can often get a temporary suspension of payments through a forbearance or deferment. Also, some borrowers may qualify for lower payments through alternative repayment plans, such as an income-sensitive repayment plan. If you are behind, you may be able to become current by consolidating your loans. Defaulted borrowers with public student loans also have a one-time right to get out of default with a reasonable and affordable payment plan in the future to help protect against crisis. Now, child support and alimony are not expenses that can easily be reduced, right? So if there's a formal court order in place and you want to have the payment amount modified, you must go back to court. It is likely that you will need the assistance of a lawyer, or at very least, a legal typing service. Keep in mind that modifications are not retroactive. So that means you are responsible for paying the full amount of all past dues. Okay, the IRS is generally willing to work with taxpayers who want to get back on track. If you haven't filed in the past few years, do so right away. It is a crime to not file a tax return when you owe taxes. If you cannot pay the amount owed in full, you may be able to set up a monthly repayment plan or establish an offer in compromise, which is a settlement of the debt for less than the amount owed. All right, we have a few more slides here. I think we're doing pretty good on time. All right, so your rights. So want to take a pause here. Have any of you folks received collection calls? And if so, how are you treated by those bill collectors? You know, do you feel that they called excessively? Any feedback there, Julia?
There's not
Anybody
seeing
receive
any
collection?
messages on collections yet.
Okay. So again, this is one of the themes here. I keep kind of repeating, but it's generally in your best interest to communicate with your creditors. But however, you do not need to put up with abuse. The Federal Fair Debt Collection Practices Act regulates collection agencies' conduct towards consumers. It prohibits bill collectors from calling you multiple times a day or at inconvenient times, from contacting you at work if you tell them that your employer disapproves, also letting a third party know that they are trying to collect the debt from you, and using false threats, obscenities, racial slurs, or insults. Additionally, if you send a written request to the collection agency to cease communication with you, they must do so, with the exception of being able to notify you once you know the action they plan to take with the debt. A sample cease and desist letter is on the handout. I'll show you that in a second, but keep in mind before sending it, that if you cut off contact with the bill collector, they may feel they have no choice but to sue you. I just want to show you that sample cease and desist letter here. Again, this is going to be included in the materials we'll be sending you, that the library will be sending you. But here's that sample cease and desist letter right there on page 9. Okay. All right. So rebuilding credit. And how many of you folks are worried about if financial difficulties may impact your credit score? Do we have a raise of hands feature here? Is that an option? No, I don't think so.
Hi, Chris. Yes, they do. So right
Oh,
now,
okay.
Matt is raising his hand. Do you want me to ask him to unmute?
Sure.
Okay.
Yeah.
Let's see. I don't see that
Uh,
hand anymore.
It's okay. Yeah, we'd that's fine. I just wanted to see how many
Okay.
are raising it. Yeah, and I'm pretty. I venture to say like we have like a lot of participants here. Probably, if you're not in crisis, like if you have any credit life at all, I'm sure you're worried about how financial difficulties may impact your credit score. So, want to start off with this point. Late payments and most other negative information can remain on your credit report for 7 years. So no one wants to have a bad credit score, and if you have the capacity to make your payments on time and in full, of course, you should do so. However, if you do not have that ability or capacity to pay all your bills and cannot work out arrangements with your creditors, as we alluded to earlier, just want to say don't beat yourself up if your credit suffers, right? Keeping a roof over your head and food in your stomach is more important than having immaculate credit. And also on that note, credit is only good when you need to apply for credit, when you need to apply for a loan or, credit card, what have you. So if that's not in your near future or you don't have a need for that, you don't need to fret too much if your credit score is impacted. And importantly, also, once you have gotten through your financial crisis, you'll be in a better position to work on rebuilding your credit, right? Because that's a thing too. Like your credit can be damaged, but you can also take measures to improve it. Resume making payments on time when you're able to, and keep your balances on revolving debt low, which is those credit cards. And if all of your accounts
Chris,
were closed, yes.
the handout is covering the slides.
Oh, thank you. How about now?
Great, we can see.
Okay, thank you. All right. So resume making payments on time and keep your balances under revolving debt low. If all of your accounts are closed, look into opening a new account. With a low credit score, you may need a co-signer to get it approved. Also, for folks with no credit or a low credit score, another way you can build your credit is a secured credit card, right? Secured credit cards require you to make a deposit, which the creditor gets to keep if you do not make the payments, and are usually the easiest type of credit to get. If you think about it logically, like I just said, they already have your money, so the risk to them is low. So that's why it's easier to open a secured credit card than like just a normal credit card with no deposit. All right. So while we all hope to never encounter financial problems again, the unfortunate truth is that many families do face hardships multiple times over the course of their lives. One of the best ways to prepare for a financial crisis is to have emergency savings. We always stress this with our coaching. Most financial experts recommend that you set aside at least 3 to 6 months worth of your essential expenses. So going back to what we discussed earlier, essential versus the non-essential expenses, discretionary, as somebody said earlier. If you have 3 to 6 months worth of your essential expenses set aside in a bank account, that can be super helpful. Saving may be difficult now, but once your financial situation stabilizes, please start setting aside into your savings account what you can. Consider having some of your paycheck directly deposited into your savings account, or setting up a regular automatic transfer from your checking account to your savings account. So it's less effort on your part. It's basically, it's automated. So you don't even have to think about it. It's just done for you. And then you don't even see the money in your checking account, or you see it, but it's quickly transferred. So, your savings is growing and you're operating off just a smaller income or smaller um, checking account balance there. So pretty soon you'll find yourself with a tidy sum, and if another financial storm comes your way, you will be covered. And the thing there too, like emergency funds are one of the main ideas is if you do find yourself in a crisis, whether that's like you need a new set of tires, whether that's you face a job loss, whether that's you need to fly to visit your family, whatever it may be. If you end up having to put that on a credit card, not only do you have a big expense, but now you have interest payments. Now you're kind of compounding the problem. So again, emergency fund, emergency savings we always highly stress that all the time. So, but beyond what I just covered here, we have a few minutes. We're still pretty early. Is there anything else that you folks feel can be done to prevent a future crisis? And yeah, we'll maybe stop now. And Julie, is there any kind of questions or just kind of items that you found interesting in the chat there?
Yeah, Matt suggested budgeting and planning to avoid future financial crisis. And then Winnie asked, what's a good amount for an emergency fund?
Yeah, again, so if you go to your whatever, we'll start with 1 month worth of your essential expenses. So what was the participant's name?
Winnie?
Vinny.
Winnie.
Oh, Winnie. Winnie. Yeah, just kind of a spitballing here, kind of guesstimate. How much are your essential expenses for a given month?
Winnie says 4,000.
So yeah, so right there, so 3 months of that is 12,000, right? That would be the start of your emergency fund. If you could get to 6 months, that would be great. But yeah, the starting point there, I would recommend is 12,000 if that's your essential expenses per month. And it looks like we have a hand raised. Let's see here.
Yes, hi. I have a question.
Yes.
So I have credit cards that I have a goal to pay. But I don't have a saving funds, and I'm finally my income is finally now stable. So should I am paying a little bit more than minimum, but I'm also doing savings because I want to have savings.
Mm-hmm.
What's the smartest way to deal with that? Should I just pay off the credit cards, big chunks, and not do much savings or half and half? What do you advise?
I always like to tell people it's not an either or situation. So they, you know, just be aware of the trade offs. That's the best thing you can do, right? So, what's your savings at currently?
Um, right now I think I'm at 3,500.
Okay, and do you have a goal, a savings goal, like a target, maybe
No,
emergency fund, or
I
okay,
no, I didn't really. No, just wanted, yeah, just wanted to have some, make sure there's something to fall off in case of emergency. Yeah.
mm-hmm. I mean, without knowing the particulars, like seeing the, your budget and like going through your, like knowing your exact situation, I think your approach is fine. Like doing, doing both. I don't think one necessarily is a priority. Again, I don't know what your debt load is. You also want to consider, so there's the opportunity cost. So the money that you'll be putting in one, you're kind of foregoing the other. So let's say, I don't know, you had a goal to save $6,000, and then you had, your credit card payments, you had whatever balance it is, and then the monthly payment, and the APR that's applied, the interest rate that's applied to that credit card.
Yeah.
Right. So there's like a mathematical way you could approach it, but I mean that can be, you know, there are calculators out there as well, like debt payment calculators. You could just do a quick search. A Balance website has debt payment calculators, but there's also a host of others that you can use. But yeah, just I would say again, without knowing the particulars, you could kind of just do some more research, see which one feels better for you, kind of run the numbers, so to speak. And just to promote ourselves, a coach is certainly capable of assisting you through that process and evaluating it more thoroughly.
Okay.
And and again, so as we spoke to earlier, we're sponsored by the city and county of San Francisco and the various agencies, through the Office of Financial Empowerment. So it's a free service for consumers, essentially, is what I'm trying to say. So
Oh, okay. Nice.
there's no,
Okay.
yeah, it's no, you could go, do as many or as little sessions as you need. So as long as you live or work in San Francisco, that's the
Okay.
caveat.
Okay, great. Thank you.
Absolutely.
And we have some other questions in the chat.
You
We
want to
have a
read them?
question that asks, could you explain the different factors that influence credit and how come credit scores can fluctuate month to month?
Great question. Yeah. So, okay. So how it works is, a credit score is kind of think about it like a report card for how you're managing your debt, your credit and your debt, right? So all the creditors, they report your activity, which means the balance, the amount that you owe, the monthly payment, the when it's due, when the account was open. All that information is reported to. There's 3 credit bureaus. You have Experian, TransUnion, and Equifax. So between those 3, you might see differences because different creditors may report to one or not, one and not report to the other, and so forth. So there might be different data on each of them. Now, it does change. It can change up or down each month, depending on the factors. So to answer your question, the factors, right? The most primary, I think I spoke to it during our presentation, paying on time, right? So if you put yourself in the position of a creditor, they want to know what you're going to make those payments when they expect them to be made. So that's 40% of your credit score. 40% of a FICO score, I think, in a Vantage score. So let me rewind. Of FICO at Fair Isaac and Company, it's a company, and they take the data from the creditors from the credit bureaus, and through their algorithms they generate your credit score. Vantage score, similar. It's actually I think a collaboration between two of the bureaus. But in any case, in the Vantage score, that's 35% of the score. So both cases, paying on time is the most important thing. So if you miss one payment, your score can plummet significantly just from missing one payment. The next factor is the type of debt that you have. So there's, we spoke to earlier, there's credit cards, which is considered revolving debt. You also have installment debt, which is a loan, basically, any sort of loan. You also have secured debt, which is, as we spoke to earlier, like a mortgage is considered a secured debt. All secured means is there's an asset that is securing that. So if you don't pay them, they can take your asset essentially. So like with a secured credit card, right? That's like a secured debt because you're secured by your money. A car loan, that's secured debt because it's secured by your car. So those are types of debt. That's another factor. That's another factor of your credit score that drives your credit score. The length of your credit, of your credit history. So like the age of your accounts, I should say, the age of the accounts, which they take an average of all your accounts. So, the older the better in that case. So that's a factor. So if you have a account that was open 20 years ago and you close it because you're not using it, that can impact your credit score as well. Julia, what am I missing here?
Did you mention new accounts?
New accounts, right? So opening new accounts, especially like I'm sorry, do you want to speak to that or do you want me to talk about it?
Oh, new accounts are how many new credit cards or loans you're applying to. Each time you apply for a loan, a hard inquiry is done on your credit report, which can lower your credit score, and it stays on your credit report for a number of years.
Right. So again, like the scores, the activity in the last 2 years is the most impactful. So as Julia alluded to, like if you are applying for multiple account or multiple cards in a short period of time, that's like a signal to the creditors and the bureau that, okay, this consumer, their income may be insufficient. They're not looking for credit, they're actually looking for income. So that's gonna lower that consumer's view in their eyes, right? Because like it's a bad risk, in other words. So that's why it would lower your credit score or impact your credit score. Age of accounts, the type of the variety. I think I might be missing one, but yeah, those are the factors. Hope that answers your question. And again, if you'd like to speak with a coach, let me get to that. I'm rambling here. Julie, is my presentation still up?
Yes, we're still seeing the savings slide.
Okay. Yeah. So folks, right there you see a QR code. You can take a picture that will lead you to our lead forms. Also, there you can see we have prefer the written format. There's our link right there. Balance TA forms, net, blah blah blah, and then obviously the Office of Financial Empowerment. You can schedule appointments through them. And any other questions there, Julie? Or just neat comments that you thought, I don't know, anything to speak to.
Hi, Chris. I think we have somebody who's had their hand up for a while.
Oh yeah, please.
Angel. I'll ask them to mute.
Okay.
Hello.
Hi, how are you doing?
I'm pretty good. I asked this question on the chat earlier. On a piece of property that is generating no income whatsoever, it's only a liability. We are not able to sell it, but we owe about $1,000 in HOA fees, and the HOA is threatening to put a lien on the property. So I want to know, is there a way for me to safely abandon that piece of property? I mean, if the HOA, I mean, we owe the county property tax and we owe the HOA fees, but it's an empty piece of land. It's not, nobody's buying it. It's only a liability. Is there a way to, for me to just not, just be rid of it?
So I do apologize. That's beyond the scope of our kind of our ability to answer or to, in our program. We don't we don't speak strictly on assets, so we can give you general overview education, but in terms of like guidance on how to sell or not sell, or anything like that with assets, we'd have to that's beyond our scope. We can refer you to folks. It sounds like this is more of like a legal issue as well, so I would recommend reaching out to an attorney or maybe some legal counsel. There's various. You can start with the Bar Association of California or of San Francisco. That'd be a good starting point. That's kind of beyond our scope and domain to speak to, and I don't want to. I can't misspeak. And again, being that is a legal kind of domain or area, like really should refrain from kind of giving you guidance on that. But I wish I could be more helpful there. But I would say contact legal counsel if you could. There's legal resources. You can start with the Bar Association of California or San Francisco, and potentially even speak with a certified financial planner. Like, they deal with assets. The library actually offers pro bono sessions with financial planners. Some of you folks may be aware, like, they can be not necessarily inexpensive, but the library does offer sessions with certified financial planners, CFPs, and through the Advisors Give Back program.
Is that the San Francisco library or which library?
Yes, San Francisco library. This
Okay,
library.
because a tax lawyer sounds just super expensive. It's not something that people like me would get involved with.
Well, there are, again, there's there are legal clinics, at the law school down the street. You could just run your question by one of the lawyers there, the student lawyers, or that sort of thing.
Which law school?
I think it's Hastings, just down the way.
Okay.
I'm sorry. I'm in the main branch of the library right now. So I realize you folks don't know where I'm at. I believe that's Hastings down the way there.
So, Chris,
Yes.
sorry to interrupt, but I put the link in the chat. So that's Advisors Give Back. There are some income limits to qualify, but go to the page and see if you qualify. And I believe you fill out a survey with them and they'll contact you. We have about 4 people with their hands raised. How many questions did you want to?
We're already at 5, so I'm fine. I can go as long as you need.
You think we have enough for those 4 questions? And then if anybody else has any more questions, you could always reach out to us. I'll put our email in the chat.
Yeah.
And we can try to answer them, or we could forward them to Chris.
Yes. And it's my slide deck. So you can Julia, also, if you want to punch in our emails for folks, they want to contact us directly.
Yes, if you want to email us, it's SMC managers.
You can also leave mine if you like.
Okay.
But you said there's some more questions there, Ramon?
Yes, we got 4. So Richard is next. I'll go ahead and ask him to unmute.
Okay.
Hi, can you hear me?
Yes, loud and clear.
Good. My question, I don't know, I think you're just going to tell me that it's beyond your purview, but we're facing a major liability lawsuit because of an accident, and we're afraid it's going to wipe out our life savings and take our home away from us. Um, and it's been started, but there's been no court ruling yet or verdict. So my question is, can you give me any advice on what to do at this point before there is a court ruling, if there's anything we can do, or can you give me advice on how to find advice? Because I've approached several financial advisors and they have refused to take up this issue with us. And whenever I call lawyers, they usually say, we only represent the complainant. We are not willing to represent the defender.
Mhm.
So any advice for me on that?
Yeah, I want to direct you back towards the Advisors Give Back. Again, they're a pro bono service sponsored to the library, so hopefully they have a different take than the advisors that you've approached so far.
Now, you'll point me back to whom?
Advisors Give Back. So Ramon put the link in the chat. I don't know, Ramon or Julia, can you put that in the chat again for this gentleman?
Let me
Advisors. So, sir, again, just to refresh, Advisors to Give Back. It's a program through the library where
Oh, okay, I
CFPs,
see.
yeah, these are certified financial planners, but they're operating on a pro bono basis. So again, there's income thresholds and I think asset thresholds. But yeah, just you gotta maybe spend some time filling out their initial forms. Then one of their advisors will contact you. By the way, for any folks who do contact them, I want to stress that if you do make an appointment, you keep your appointment or communicate with them if you're not going to make it, because I understand, like, if you miss an appointment, like, you're pretty much not, persona non grata sort of thing. So, yeah, you want to make sure to keep the appointments with them if you make one. But sir, so I would also say in your situation, so you're fearing that your savings is going to be wiped out. Um,
And
I
then
guess
they're going to go after our home because it could be a multi-million
oh,
dollar ruling against us. There was a death involved.
okay. Yeah, so yeah, as far as like the assets themselves, like I couldn't speak to that. But just as far as preparing for the situation, I would say, like, run those numbers, run those scenarios, like what's your, you know, before and after, and a positive ruling and an unfavorable ruling, what that would look like. Um,
I think
and
we
no,
might be faced with bankruptcy at the point of an unfavorable ruling.
okay, I understand that. Yeah, okay. And, well, again, that's a very nuanced conversation, and there's a lot of, you know, there's timing. There's a lot of layers to like a bankruptcy discussion, which is again beyond our purview. But if you, uh, similar to the lady I spoke to earlier, like if you reach out, I'm sorry that the lawyers you spoke to so far are unwilling to work with you, but if you go to one of the legal clinics, I'm pretty sure there's some sort of legal resources here in the city that would be willing to, assist you in some fashion.
Okay. And
Yeah.
I just want to relate that for us, we're older people. We're 78, and we really regret not having bought an umbrella insurance policy because our auto insurance only has the minimum liability for death, and that's why we're facing this because we didn't have insurance and we thought we did have enough, but it's nothing compared to a $2 million ruling or something. So I'm just putting that out there that if your financial advisor, which some do, say that a umbrella insurance policy is a good idea, listen to them. It could save your life savings and your home.
Thank you for sharing that your experience there, sir. I appreciate that. I know it's very difficult. But yeah, that can be, it kind of a little bit of contradicts a little bit what I said earlier, because we actually, if you are in a crisis situation, you're having to reduce your monthly expenses. One of the ways we did discuss is to do a liability only policy. But again, as you're indicating, you want to be very, very aware of the risks involved with anything we do. But in this case, like with getting just a liability only policy, as you're testifying to now, it can be highly risky.
Okay, thank you for your help.
You're very welcome. And yeah, feel free to we're here to serve, and whoever want to speak to a coach directly, be happy to do so. By the way, just in terms of our appointments, we go Monday through Saturdays, so 10 to 6 roughly. So yeah, 10 to 6 is our hours of operation as a coaching program. So it's FYI. Ramon, is there any others that you'd like to?
We have Wendy, and then time probably for just one more after that, Cecilia. So Wendy is next.
Okay.
Wendy should be able to unmute now.
Okay. Hi, Wendy.
Okay. Thank you. This is not a question, but a comment. The lady who spoke previous to this about a piece of land that can't be sold. It's I don't know whether it would be possible to either donate the land to a nonprofit or something. That might be one way of relieving yourself of it. That's all I wanted to say. Thank you.
I appreciate your input there. Yeah, that might be. Again, I couldn't tell you yay or nay, but that sounds like it's worth considering or looking into, at least doing some research there. Yeah,
Thanks, Wendy.
Sure.
I do know a little bit about that answer. I was told that I need to clear all the debts from that property before I could donate it. So being that it already has like $1,000 bill on it, yeah, I'm not willing to pay $1,000 just to get rid of it.
That makes sense.
But thanks, Wendy.
Okay.
Thank you, Wendy.
And we have the last question for today.
Okay.
So I'm going to unmute Cecilia.
Okay.
Hi, thank you, Chris, for taking my question for this awesome presentation.
You're welcome. Absolutely.
I have a kind of an unorthodox question. I was wondering if you knew about if lenders, I have an issue with a lender, a good thing, where they erroneously cleared my debts, like for 2 of them, for 2 loans, and I paid them,
Wow.
and I emailed them, I called them, and I was like, "Are you sure?" And he was like, "Yeah, it's," and then, so if they clear it and they said they'll send a letter out, could they renege that? Can they, once they make that decision, can they reopen it?
I mean, I think anything's possible, right? I think that, yeah. I don't know, technically speaking, like what the statutes, how that works, but I would imagine they could. Have you ran your credit report? Or yeah.
No, they said that they would report it to the bureaus. But it would technically, it would go down, right? Because it's like closing out, making it smaller.
Wait, so are they closing the account or bringing the debt to zero? Or
Yeah,
or,
bringing it to zero.
and do the account still open?
Well, I still have 2 other loans with them, so yes.
Oh, it's a loan. Okay.
Yes.
And it's an error though, you said.
Yeah, on their behalf, like their computer just zeroed it out via a payment that I made, but it wasn't the whole thing.
And they what did they say to you? Did
They
say
said that they just said it was zeroed out except for the principal, and so I paid the principal, and so they say as soon as you pay the principal, which was like $10, and then they said like it would be technically closed, and then they'll
Good.
send a report to my credit, and then.
So yeah, annualcreditreport.com. Again, you could please access that free resource. and just take a look at your credit report, see what that item, that each item is called a trade line, right? There's trade lines on there, so each account is a trade line. See what the status of that is. If it's zeroed out, or it should be good to go. I just want to say, going forward, like, did you document all your interactions with this lender?
Yeah, and in fact, I even wrote them and I said, "Oh, the payment didn't go through," but they said it did. And so I'm like, I mean, I'm just telling them, I'm like calling, like I'm being transparent, and I'm being the one that's
Absolutely.
like,
Good.
trying to be upfront about it. But they just said, "No, it's cleared out," and I'm not going to argue with them.
Yeah, for sure. Well, I mean,
Sorry.
that's for your
They're just
benefit. But
like,
again, just going forward, just to cover your back there, keep that documentation, and I would say, monitor your reports frequently over the next few months, just to make sure like there's no changes there. And
but technically it would go down. Like I shouldn't,
mhm,
it would be a good thing if I saw that it
it's a
went
good
down,
thing.
because
Oh, it's
when you
fantastic.
close out something, doesn't it make your credit like line smaller?
So this is, if it's a loan, that's installment debt, right? So, that's a factor I didn't speak to earlier. Utilization rate.
Yeah, that's it.
Utilization
Mhm.
rate. That refers to revolving debt, or like credit cards, right?
Okay.
So it's the amount of the available credit that you're currently using or you have a balance on,
Right.
right? So you contrast that with installment debt. It's a set amount, and you're paying, you already have the money, and you're just paying a set amount each month, right? There's no credit limit there, right? They gave it all to you already. Now it's just a matter of paying them. With the revolving
Oh,
debt, the utilization rate, that's where the utilization applies, right? So utilization, I'm trying to say, utilization does not apply to loans,
okay.
right?
Okay. I
So
got you. So that's
that would
only
be
for like
zeroed out.
if you close out for like a credit card or something like that.
Correct.
Oh,
So
okay.
that should be
So
good, like, because your existing, with the amount that you owe overall on your credit, it's going to go down. So
yeah.
that's helpful.
Okay,
And
so like
that
even
account.
if they made the mistake and I get a letter in the mail, can they, can they reopen it? That's what I was like,
Well, again, that risk is there,
legally.
so that's where you maintain your vigilance and your documentation, and then if it is, like, you can dispute it both with them and also with a credit bureau that it'll be
Okay.
reflected in, right? And then say, hey, look, we've already talked about this. Here's all my documentation. They said it was fine. And then I think that's what I would say to that.
Okay, yeah. Right. Yeah, I mean, it's you can't double jeopardy me.
Hmm. Well, yeah, I mean, and they said they told you, right? It's not your, it's resolved. Like, they stated that they said you don't owe them anymore, right?
Yeah.
Okay, well, that's what they said. So
Yeah, right. I
you're
mean,
fine.
it's not my fault that like I don't know where they think their funds came from, but I don't know where.
That's not your problem. That's not
Not
your
my
problem.
yeah, exactly. Yeah, not my circus, not my monkeys. Like for once, something good happened in this. I just wanted to give also some, this stuff does happen. So, I hope it happens to everyone here, man. God bless.
Yeah, no, that's wonderful. Thank you for sharing that. I like good news.
Yeah. Okay. Thank you. Take care.
Take care.
Bye-bye.
Okay, bye bye.